In this video, we're going to explore the basics of trading, the importance of financial markets, and introduce some essential tools that can enhance your trading decisions. Trading involves buying and selling assets, like stocks, currencies, or commodities. The core principle of trading is to buy low and sell high, but successful trading requires much more than just that. It's about making informed decisions based on market dynamics, trends, and risk management. Understanding these elements is crucial for anyone looking to succeed in trading. The process involves analyzing various factors that affect the price movements of these assets. Whether it's economic indicators, market sentiment, or geopolitical events, everything plays a role in shaping market dynamics. Financial markets are essential as they facilitate capital flow, liquidity, and income opportunities. They serve as the platform where traders and investors can interact to exchange these assets. Markets vary widely, from stock markets to forex and commodities markets, each with its own characteristics and mechanisms. For instance, the stock market is known for its long-term growth potential, while the forex market is known for its high liquidity and trading volume. Understanding the unique characteristics of each market can help traders and investors choose the right market to participate in based on their goals and risk tolerance. Two primary methods of analysis are essential for making informed trading decisions: technical analysis and fundamental analysis. Technical analysis uses charts to predict price movements. It focuses on patterns and trends that can indicate future movements. Tools like moving averages, RSI, and MACD are commonly used in technical analysis to help traders make decisions. On the other hand, fundamental analysis evaluates a company's financial health. It looks at factors such as earnings, revenue, and profit margins to determine the intrinsic value of an asset. TradingView offers tools for both technical and fundamental analysis, enhancing our market analysis capabilities and helping us make more informed trading decisions. Candlestick charts, crucial for technical analysis, provide insights into market movements within specific timeframes. Candlestick charts are highly informative and visually intuitive. A green candlestick typically indicates that the closing price was higher than the opening price, signaling bullish market sentiment. Conversely, a red candlestick shows that the closing price was lower than the opening price, indicating bearish sentiment. Patterns formed by multiple candlesticks, such as dojis, hammers, and engulfing patterns, can provide valuable insights into potential market reversals or continuations. Timeframes in candlestick charts can range from as short as a few seconds to as long as several months. Selecting the right timeframe is crucial as it aligns with your trading strategy and objectives. For instance, day traders who aim to profit from short-term price movements often focus on shorter timeframes like 1-minute, 5-minute, or 15-minute charts. These shorter timeframes allow them to capture quick price changes and execute multiple trades within a single trading day. On the other hand, swing traders might look at hourly or daily charts to identify medium-term trends and hold positions for several days or weeks. Long-term investors who are interested in the overall growth and performance of an asset typically focus on longer timeframes, such as weekly or monthly charts. These longer timeframes help them to filter out short-term noise and concentrate on the broader market trends. Understanding and selecting the appropriate timeframe is essential for aligning trading strategies with your goals and risk tolerance. For example, a day trader using a 1-minute chart will have a different approach compared to an investor using a monthly chart. TradingView's Pine script allows creating and modifying trading scripts. Indicators give visual cues, while strategy scripts can be backtested to measure effectiveness. Backtesting is the process of testing a trading strategy on historical data to see how it would have performed in the past. This helps in refining strategies and improving their chances of success in live trading. TrailAlgo uses these scripts to efficiently apply dollar-cost averaging, providing automated insights and allowing users to optimize settings based on backtesting results.